we're really excited that we are nigh on production now. We have the mine plan out. The bulk sample is happening. We're planning to turn on the mill near the end of this quarter to process that bulk sample. And then we hope to roll into production sort of in the middle of the year and start.
You're watching Silver News Daily. Subscribe for more.
Did you know that as gold races toward record highs, it's not just investors cashing in. Silver is gearing up for an explosive surge too. Gwen Preston, a leading voice in mining, is uncovering how a once-overlooked project is setting the stage for a gold and silver frenzy that could rewrite market history. Stay tuned, because the connection between soaring gold prices and silver's potential might just shock you.
I mean, the company was put together specifically because we see what you were just describing. We see the gold price continuing to perform over the coming years for lots of reasons that you and I could spend a long time discussing that aren't really the purpose of our conversation today. But we see a strong gold market ahead. And the team that started this company saw that a few years ago and went out looking to build a company that gave investors extra leverage in a rising gold market. So how do you get extra leverage? I mean, the gold price rising from 2,200 to 2,600, that's a nice gain. If you own physical gold, that's a nice gain. But what classically happens when the gold price rises is that companies that are producing gold get a multiple of that increase, because general ballpark speaking, their costs probably remain relatively stable. So the additional gold price primarily goes to profit. I'm obviously generalizing. There's inflation, there's other factors as well, but that's the rationale for why producing gold miners those stocks offer multiples of the increase in the gold price when investors are interested in gold. And to add on to that a little bit, when you go from not producing any gold to producing gold, so you're a new producer, there's an additional re-rate factor that goes on there, because as you would expect, a company that's not producing gold yet gets rated at less leverage to gold than just the gold price. And so the purpose of West Red Lake, the underlying reason that this company exists, is to give investors that re-rate from developer to producer, and then to be able to offer leverage as a producer to the gold price in a rising gold market. That's why we're here. That's our reason. Madson was a phenomenal first asset to find to start to accomplish that goal, because that accelerated timeline to production means that it's given us the opportunity to deliver that first re-rate within a fairly short time frame. Really unusual in mining, because mining usually takes a really long time to get into production. So we're really excited that we are nigh on production now. We have the mine plan out. The bulk sample is happening. We're planning to turn on the mill near the end of this quarter to process that bulk sample. And then we hope to roll into production sort of in the middle of the year and start producing gold into this gold environment. That we expect will deliver that re-rate from developer to producer. And then we will carry on from there. And carry on from there means turn Madson into more than this initial mine plan lays out, because with a bit more work, drilling, connecting zones, understanding zones better, and just the practical application of a pretty high gold price, we do think that Madson is going to be significantly more than this mine plan lays out. There's also some nice peripheral zones and deposits that we're going to pull into the mine plan. So the next stage of West Red Lake, make Madson more, and look around for what might our next asset be that we bring into the stable, because that's the reason that the company exists, is to give investors increasing leverage in a rising gold market.
Gold has always been the ultimate safe haven, but what's driving its unprecedented surge in 2025? Let's dive into the core reasons behind this frenzy. First, central banks worldwide are on a gold buying spree like never before. In 2024 alone, these institutions collectively added over 1,000 tons of gold to their reserves, a continuation of a record-breaking trend. Why? Many countries are diversifying away from the U.S. dollar and its geopolitical tensions and a growing global debt crisis. This move to de-dollarize is creating a relentless demand for gold as a hedge against currency instability. Next, we can't ignore the influence of gold ETF. Historically, sizable inflows into these funds have marked the start of every major gold bull run, and 2025 appears to be no different. Just recently, ETF inflows flipped positive after years of outflows, signaling renewed investor confidence. With even a moderate increase in ETF demand, the supply-demand balance tightens significantly, pushing prices higher. Geopolitical unrest is another major driver. With ongoing trade wars and political uncertainty in major economies like the US and China, investors are rushing to gold as a store of value. Central bank policy is also playing its part. While interest rates remain relatively high, the market is now pricing in future cuts, reducing the opportunity cost of holding gold, a zero-yield asset. Lastly, gold's recent strength is underpinned by structural changes in its market. Post-pandemic, scrap gold recycling, a traditional supply source, has been sluggish despite record high prices. This leaves new mine production and investor demand to shoulder the burden of supply, and the result is skyrocketing prices. In this perfect storm of demand and constrained supply, gold has already shattered records, recently surpassing $2,600 per ounce. With many analysts forecasting it could break the $3,000 mark later this year, the implications are enormous, not just for gold but for silver as well. Because when gold rallies, silver is often not far behind. But why does silver, often seen as gold's little brother, tend to follow suit? We'll uncover that dynamic next, but for now, ask yourself this. Could we be on the brink of a new era for precious metals?
We've been running, just doing exactly that, addressing the things that's needed to be done so that Madson could be restarted successfully. And in the last 2 weeks, the fruits of those labors have produced 2 more really big news releases for us. One of those is that we closed a $35 million debt facility. This is the first significant debt on the project, the only significant real debt on the project. And it's possible to take on debt because we are so close to production. So we will be able to start repaying that debt when we get into production. That's when debt becomes a reasonable opportunity for a company. And so that money makes us very well funded to get the Madson Mine restarted, which we are going to do sort of in the middle part of this year, which is very exciting. And then the other big news that happened just this morning when we put out what's called the pre-feasibility study. Really what it is here's the mine plan. Here's what we're going to do at Madson. And it lays out how we're going to mine it and what the financial results are of mining it, what it costs and what it produces. And the headline numbers from that are we're going to produce over 67,000 ounces of gold a year for 6 years of full operations, and the average free cash flow in those 6 years of operations is $70 million. Those are Canadian dollar amounts that I'm referencing. So really, the results of this pre-feasibility study underline that it makes sense to restart this mine now. 6 years, I realize, is a somewhat short lifespan for a mine. But the message that I'm really trying to convey here is that it makes sense to start this mine now based on what we've been able to do in just 18 months at the project. And by getting into operation and by getting down into the deposit, developing more, looking around more, and doing more drilling, we really strongly believe that we are going to be able to operate well past 7 years with some further success, drilling into areas, connecting areas, and pulling those into the next iteration of a mine plan. So yeah, the rapid pace continues.
At the heart of this gold frenzy lies a major player making waves, West Red Lake Gold and their Madson Mine project in Ontario. This isn't just any gold mine. It's a revitalized opportunity in one of the world's most prolific gold districts. The Red Lake region has already produced over 30 million ounces of high-grade gold, and now West Red Lake Gold is poised to unlock even more value. So why is this project drawing so much attention? First, the Madson Mine is uniquely positioned for rapid production. Unlike most gold projects, which require years of development, Madson is essentially production ready. It boasts over $350 million of infrastructure investments from previous operators, including a fully built processing mill, established underground development, and critical permits. West Red Lake acquired this asset at a fraction of its value, setting the stage for a quick and cost-efficient restart. But infrastructure isn't the only advantage. The mine's resource base is high-grade, with an indicated resource of 1.7 million ounces grading 7.4 grams per ton, a rarity in today's mining landscape. This grade means higher profitability per ounce, even if gold prices stabilize, and with current prices hovering around $2,600 per ounce, the margins are already extraordinary. The team at West Red Lake Gold isn't just relying on existing resources either. They've been aggressively defining additional mineralization, completing over 85,000 meters of drilling in 2024 alone. This drilling not only increases confidence in the resource, but also identifies new high-grade zones that could extend the mine's life and boost output. What's more, their pre-feasibility study, completed in early 2025, confirms the robust economics of the project. The planned project's over 6,000 to 7,000 ounces of annual gold production for at least 6 years, with an average free cash flow of $70 million per year. And these figures are based on conservative assumptions, using a gold price of $2,200 per ounce, well below today's spot prices. This combination of low startup costs, high-grade resources, and immediate cash flow potential positions West Red Lake Gold is a standout in the gold sector. But the ripple effects don't end with gold. As the Madson Mine begins production, its contribution to the market could tighten supplies and fuel broader investment interest in precious metals, including silver. West Red Lake Gold's resurgence is a perfect example of how the right project at the right time can shape market dynamics. But here's the bigger question. Could this gold boom unlock silver's long-awaited potential? Let's explore the fascinating link between these two metals in the next segment.
Thing is because we bought an unusual asset, a fantastic opportunity. This is the Madson Mine, which is almost right in the middle of Canada, on the western edge of the province of Ontario, in a famous gold district called the Red Lake Gold District. There's been 30 million ounces of gold pulled from high-grade veins in the Red Lake District. 2 million of those ounces came from the Madson Mine, from the 30s to the early 70s. Again, from rock that averaged 9 grams per ton, which is a high grade for a gold deposit. That mine came to the end of its reasonable lifespan in the 70s when gold wasn't worth very much. And then a company tried their hand at restarting the mine between 2014 and 2022. And they did some phenomenal work. They did a lot of drilling. They defined the resource that is still the resource that we're sort of working with today. And they built a really good mill. They permitted everything, and they restarted the mine. They did unfortunately make some mistakes along the way in how they approached knowing exactly where the gold is and how they approached mining the gold. And those mistakes were enough that they ended up going bankrupt after only 14 months of operation, which is what created the opportunity for us. So West Red Lake came in and was able to buy a permitted, built mine sitting on 1.7 million ounces of indicated high-grade gold for a very modest cost. $350 million had been spent, and we bought it for $6.5 million cash plus shares in the company and some deferred payments. And we absolutely needed to spend time addressing the things that had gone wrong with the prior operator. But man, were we ever given a head start at getting to production. So that deal closed 18 months ago now. And since then...
Now, let's dive into the fascinating relationship between gold and silver, a connection that's as old as their use as currency. While gold often takes the spotlight, silver is its constant companion, and the movements of one often echo through the other. But why does this happen? The key lies in their historical correlation. Gold and silver prices have moved in tandem for centuries, driven by their shared roles as stores of value. In times of economic uncertainty or currency devaluation, both metals attract investors seeking safety. However, silver often exhibits more volatility than gold. It's known as the poor man's gold because it's more accessible to small investors. When gold prices rise, silver frequently follows with amplified gains as retail and speculative investors pour in. But there's more to the story. Unlike gold, silver is also an industrial metal. Its dual role makes it highly sensitive to broader economic trends. Industrial demand for silver, which spans industries like electronics, solar power, and electric vehicles, is a critical factor in its pricing. This demand often surges in tandem with gold's rise, as strong economies and growing industries amplify silver's appeal. The current tightening of the gold-silver ratio highlights this relationship. This ratio, which compares the price of 1 ounce of gold to an ounce of silver, has recently fallen. Historically, when the ratio tightens after a long period of divergence, it signals a strong silver rally is on the horizon. With gold hitting record highs, silver is poised to narrow the gap. Moreover, gold's price momentum creates a psychological effect in the market. Investors who find gold too expensive often turn to silver as an alternative, boosting its demand. As a result, silver benefits from a delayed but significant spillover effect whenever gold enters a bull market. So where does this leave silver now? With gold breaking records and industrial demand on the rise, silver is positioned for an explosive rally. And it's not just speculation. The fundamentals are stronger than ever. But what's fueling this industrial demand? And how could it drive silver prices to new heights? Stay tuned as we uncover the critical role of silver in the modern economy in the next segment.
That's a really good question. In fact, in our corporate presentation, we have a slide that is titled Mining is Risk Mitigation. So you would appreciate that slide, I'm sure. And what I do in that slide is I list a lot of the risks that commonly can upset a new mine startup. So really key risks for new mine startup, examples of where that has happened in the last 10 years, examples of mines where that has happened. And then the third column is explains those risks as they pertain to West Red Lake. So some of them don't pertain to the Madson Mine because not every risk is relevant at each mine, depends on the mine type and whatnot. And then for those that are pertinent, what are we doing to address those risks? And so the key risk really at the Madson Mine is the risk that exists for all high-grade, narrow-vein underground gold mines, which is the gold or silver or whatever it is that you're going after exactly where you think it is, first of all, and secondly, can you pull it out economically? And so how do you address those two? Well, that you address the first one by developing a rigorous system to produce an accurate resource model. And so that system for us, we have the benefit of the prior operator having stumbled. And they recognized that they were stumbling and they tried to catch themselves. And they almost did. By the last 2 months of that prior operator's production tenure, they were producing almost the amount of gold that they needed to. It was just a little bit too little too late. But what they did to get to that near success, we've taken that model. How intense does your definition drilling have to be? So how many holes do you have to put into your resource?
Silver's role as both a precious metal and an industrial powerhouse is what makes it uniquely positioned for explosive growth. While gold's appeal is largely tied to its status as a safe haven asset, silver has the added advantage of being indispensable to modern industries, particularly those driving the green energy revolution. Let's start with renewable energy. Solar panels are among the biggest consumers of silver, as the metal's high conductivity makes it a critical component in photovoltaic cells. The global push toward renewable energy has led to an unprecedented demand for solar technology, and with governments worldwide committing to ambitious climate targets, this trend is set to accelerate. In fact, industry analysts predict a sharp rise in silver usage within solar manufacturing through 2025 and beyond. Then there's the electric vehicle, boom. Silver is a key material in EV batteries and charging infrastructure, as well as in the electronic components that power these vehicles. As EV adoption grows globally, With major automakers like Tesla, Ford, and GM ramping up production, silver demand in this sector is expected to soar. Beyond renewables and EV, silver plays a crucial role in other cutting-edge technologies, such as 5G networks and medical equipment. From touchscreens to antimicrobial coatings, silver's versatility makes it integral to a wide range of applications, cementing its status as an industrial metal with staying power. But it's not just about technology. Investors are also driving silver's momentum. With gold prices at record highs, many are turning to silver for its affordability and higher growth potential. The current gold-silver ratio suggests that silver is undervalued relative to gold, presenting a prime buying opportunity. What's more, the supply side of the equation adds fuel to silver's rally. Silver mining output has struggled to keep pace with demand in recent years, and recycling alone cannot close the gap. As industrial and investment demand converge, the stage is set for a supply crunch that could send prices soaring. So here's the big question. Could these industrial trends, coupled with silver's historical relationship with gold, ignite a rally that takes silver to unprecedented heights? In the next segment, we'll explore the geopolitical and economic forces, adding even more fuel to silver's potential explosion.
Yeah, for sure. So, I mean, you started this conversation referencing our rapid pace of news, and that's going to continue. And over the next quarter, what's going to be really dominant in that news flow are what are called reconciliation results. So the entire thesis of restarting the Madson Mine, of West Red Lake being able to successfully restart the Madson Mine when the prior operators stumbled, is that we suggest that all of the increased drilling that we've done that helps us know where the gold is really accurately, and our more experienced approach to mining that gold means that we are going to be able to pull, tons from the ground at the amount and gold grade that we say. That's the premise. And so what reconciliation results refers to is we're currently doing the very first bit of that. We're taking bulk samples from a couple different spots in the underground mine, and we're stockpiling those on surface. And so, I'm making up numbers right now, but we are going to be able to say, we expect from this stope mining area to be able to pull mineralization that's 6.9 grams, and from this stope that's 9.2 grams, and from this stope that's 7.4 grams. And if we turn on our mill and process those bulk samples, and they come in at 6.7 and 9.2 and 7.4 grams per ton, that validates the thesis. That says that we can do the thing that we said we're going to do, and therefore Madson can be a success. So that's what's coming up. There's going to be an initial set of reconciliation results where we just pick a few rocks, basically, in a very systematic way, but off of those stockpiles and from the areas that we're mining, to do an early, quick look at whether the grades are coming in line. And then we're going to start up the mill, and we're going to process those bulk samples, and we're going to get full reconciliation results. So those two sets of results are going to be really important over the first quarter to validate the thesis. And then once we've done that, we're rolling into production mining. We're going to build up a stockpile of ore on surface, and then we're going to start sending ore through the mill. And so over the next 6 and 8 months, we are going to start producing gold. And so it's coming. It's right around the corner. And we are going to be a rare new producing gold mine, especially in terms of a high-grade gold mine, anywhere in the world in 2025.
The industrial surge in silver demand isn't happening in isolation. It's being amplified by powerful geopolitical and economic forces, shaping the global markets. Let's explore how these dynamics are setting the stage for silver's meteoric rise. First, consider the ongoing geopolitical tensions that have created an environment of heightened uncertainty. Trade wars between major economies, such as the U.S. and China, are driving investors toward safe haven assets like gold and, by extension, silver. Political instability in regions like Europe and the Middle East further reinforces this trend, as investors seek protection against potential economic disruptions. At the same time, the U.S. dollar, traditionally a counterweight to precious metals, is showing signs of weakening. After a decade-long bull run, The dollar is under pressure due to ballooning fiscal deficits, rising national debt, and shifting global trade dynamics. A weaker dollar typically makes silver and gold more affordable in international markets, spurring demand and driving prices higher. Central banks are also playing a pivotal role. Their monetary policies, particularly in response to slowing global growth, are creating a low-interest rate environment. While this favors gold as a zero-yield asset, it also reduces the opportunity cost of holding silver, making it more attractive to both institutional and retail investors. Inflation is another critical factor. With major economies grappling with persistent inflation, investors are flocking to assets that can preserve purchasing power. Silver, with its historical reputation as a hedge against inflation, is becoming an essential part of portfolios. And as inflation pressures persist, the demand for silver is likely to intensify. Then there's the supply side. Major silver-producing countries like Mexico and Peru are facing challenges ranging from labor strikes to environmental regulations, which are constraining mining output. This supply strain, combined with surging demand, is creating the perfect storm for a significant price breakout. In this context, the market is primed for a silver rally. But this isn't just speculation. It's the convergence of global economic and geopolitical forces that have historically preceded major movements in precious metals. As we delve into the next segment, we'll explore how Gwen Preston's insights and the Madson Mine project fit into this narrative, and what it means for investors looking to capitalize on silver's potential.
Yeah, really pertinent question, obviously. So I think there's two sides to consider. I think there's the gold price side of things, and then there's the why do investors start looking at gold equities as opposed to other opportunities in the stock market. So if we want to look at the gold price side of things, I mean, the gold price is phenomenal. Above $2,600, I have nothing to complain about. And I am bullish on the gold price itself from here. I think that increasingly, almost on a daily basis, I feel like the conversation around debt burdens, money printing, however you want to capture that impact, that reality in the market, in our world, that conversation keeps rising. And I think alongside that, there is increasing acknowledgement that it doesn't matter who is in charge of the administration, who's in charge of the government. It is very difficult at this point to stop that debt train. It is on a runaway track. There are so many commitments in spending, and there's so much debt burden that it is very difficult to constrain spending in a way that has any impact on that debt situation. And I think that conversation keeps coming up. And I think the more and more people have that conversation and start to get aware of the reality of debt, that always brings people to gold. It brings people to other things too. I totally accept that cryptocurrencies are also considered an answer or a way to hedge the risk of that debt situation. But that situation is real. It's rising. People are becoming more and more aware of it. So I think that is the sort of the big picture support for the gold price. And that applies to central banks buying and investment funds buying and individuals buying and all of those things. So that's the gold price side of things. At some point, the gold price gets to a level where producers are just making so much money that gold equities become attractive just on like a cash flow or basis, right? I don't know what point that is. I wish that we were there already. We are to some extent, like you say, some of the best names are performing quite well. But I think that is continuing, and that will happen to some extent as we roll through. On the why do investors look for gold equities, I think that's the bigger struggle, by which I mean usually when gold is rising, it is often because there are risks elsewhere that are making investors want to hedge their equity portfolio. And that is not the situation that we've been in for the last little while, at least not to the extent that most investors are looking to hedge their equity portfolio. And so I don't know how or when that might shift. I think that the gold price rising will bring interest to gold on the whole. I think you're seeing increasing awareness, of gold outperforming, just the gold price on its own outperforming the S&P. And so I think that we will start to get interest in gold because gold equities can also perform in just a strong economy. They can perform alongside a strong economy. It's just a little bit of a harder situation for momentum to build in than when investors turn to gold equities because they are hedging risk in the stock market or something like that. So it isn't ideal from a gold equity perspective because there hasn't been reason. People have been buying the S&P and doing just fine, thank you very much. And that has been just the thing. People haven't been actively looking to hedge their equity portfolio. I don't know how or when that changes, but I think the strong gold price itself is leading us to better places overall.
Now let's turn our focus to Gwen Preston, a respected voice in the mining world, and her take on the evolving gold and silver markets. As the Vice President of Communications for West Red Lake Gold, she's had a front-row seat to the research into the Madson Mine, and her insights offer valuable clues about what's next for precious metals. Preston emphasizes the strategic advantage of the Madson Mine's rapid path to production. She notes that the mine's extensive pre-existing infrastructure and high-grade reserves not only make it a stand-up project, but also a potential catalyst for broader market shifts. With production slated to begin by mid-2025, the timing couldn't be better. Gold's rally is in full swing, and the mine's output will add much-needed supply to a market already experiencing tight conditions. But what about silver? Preston has pointed out that silver often benefits indirectly from gold's strength as investors seek alternatives when gold prices reach historic highs. She highlights how the Madson Mine's success could spark renewed interest in mining equities across the board, potentially channeling capital into silver-focused projects as well. Preston also stresses the importance of operational readiness in this bull market. West Red Lake Gold's strategic planning, spanning definition drilling, underground development, and resource modeling, serves as a blueprint for how mining companies can capitalize on high commodity prices. This is especially relevant for silver, where underinvestment in mining infrastructure has created supply constraints. Another key point she raises is the psychological impact of record gold prices. Investors flocking to precious metals often diversify their holdings in silver, but its affordability and industrial appeal becomes an obvious choice. Preston believes this behavioral shift, combined with silver's growing industrial demand, could fuel a rally that rivals past market surges. What makes her predictions particularly compelling is her track record. She's been vocal about how shifts in the broader economy, like the weakening U.S. dollar and geopolitical volatility, create fertile ground for both gold and silver. And with the Madson Mine nearing production, her insights carry weight as she is directly involved in one of the most promising mining projects of the decade. So what does this mean for you? As Preston suggests, this is a time of enormous opportunity in precious metals. But with opportunity comes the need for strategy. In the next segment, we'll outline how investors can position themselves to make the most of this historic moment.
Get an accurate understanding of where the gold is. What sort of requirements do you have to put on the various spots of your resource model before you're willing to engineer how you're going to mine those areas? We've taken their system, we've made it ours, and that is our approach to managing the risk of where the gold is. So that's our approach on that. And then on the mining cost side of things, that's really comes down to efficiency and operational readiness. And mines are really complicated machines, like incredibly complicated machines. If you think of the number of steps that are required that have to happen in order, accurately, and intertwined in order to find an ounce of gold, define it, drill it, engineer it, finance it, mine it, move it, have the personnel, have the equipment, all of it just for 1 ounce of gold, it is very complicated. And so the way to manage that complexity, which is really the way to manage the cost of mining, those are the same things, is to understand how complicated the machine is and to have as many parts of that machine operating efficiently before you start trying to do it as possible. And again, that's where our setup is actually a benefit to us. We have been underground operating for 16 months already. And by operating, I mean blasting tunnels, drilling, creating new access to the ore. We know how much it costs to blast and move a ton of ore at the Madson Mine. We're not estimating it, we're doing it. And so that on the ground experience has our costs very real. It has our teams practicing what they're going to do before we're actually doing it. It means that we're staffed up. Like we expect to need 220 people on average at site during operations. We already have 140 people. We've already trained them. We've already got them going. So real operational readiness and understanding the complexity of the machine, I think, are the way that we are addressing the cost side of things. So,
with the gold and silver markets poised for explosive growth, the big question is, how can you position yourself to capitalize on this historic opportunity? Let's break it down. First, consider diversifying with gold ETF. These funds allow you to gain exposure to gold's price movements without the need for physical storage. Given the surge into ETF inflows that's driving gold's rally, investing in a gold ETF could provide a convenient and liquid way to benefit from the market's upward trajectory. Next, think about physical silver. Unlike gold, silver's affordability makes it accessible for smaller investors, and its industrial demand provides a dual layer of value. Whether it's coins, bars, or even bullion-backed savings accounts, owning physical silver offers a tangible hedge against inflation and market volatility. Mining equities are another avenue to explore. Companies like West Red Lake Gold offer exposure to the operational side of the precious metals boom. The Madson Mine project is a perfect example of how operational efficiency and high-grade resources can generate significant returns, especially when tied to rising gold prices. And let's not forget silver mining stocks. These can provide leverage to silver's price movements, amplifying potential gains. For those with a higher risk tolerance, silver-focused ETF or mutual funds might be worth exploring. These funds pool investments into a diversified portfolio of silver assets, balancing exposure across industrial and investment demand. They also allow for broader exposure to companies leading innovations in silver-based technologies, such as renewable energy and electric vehicles. Timing, of course, is critical. The current gold-silver ratio suggests that silver is undervalued compared to gold, presenting a prime buying opportunity. By entering the market during this relative mispricing, investors can position themselves to benefit as the ratio normalizes and silver catches up to gold's rally. Finally, keep an eye on macroeconomic indicators. Factors like interest rate changes, inflation trends, and central bank policies will play pivotal roles in shaping the trajectory of precious metals. Staying informed about these drivers ensures you can adapt your strategy as market conditions evolve. But here's the bottom line. The alignment of gold's record-breaking run, silver's growing industrial demand, and a macroeconomic backdrop has created a rare moment of opportunity. In the next and final segment, we'll pull all these threads together to explain how these forces are setting the stage for silver's explosive rise. Don't go anywhere. You won't want to miss this conclusion.
yeah, both of those sides are really important. And I'm glad you referenced the people who came to us attached to the Madson Mine, because the previous stumble, from where we stand, we see, and from everything that we've heard from the people who worked there, it was largely a top-down challenge. It was from the management side of things. The people on site weren't given the opportunity to succeed, but there was a lot of effort put in. There was a lot of knowledge established, and we have the benefit of that. And so, I mean, I'll take our chief geologist, Jill Chrisman, as an example. I mean, Jill, Shane, the president and CEO, we joke regularly, but not really joke, that Jill is the most important person at West Red Lake Gold. She has been with the project for 5 years. She knows the geology inside and out. She knows exactly, her understanding of this mineral system, what is needed to mine it to define it accurately, and therefore be able to give the operations team the ability to mine it accurately. It's just unparalleled. You can't pay for that kind of knowledge. So, and she's one really good example, but there's lots of people who came to us attached to the project who brought that kind of that kind of wealth of knowledge and experience with them. And then, of course, we've brought new people in who are supplementing that, who are complementing that. And Shane Williams gets a lot of credit as the leader of this company for having understood the need to build a strong team, and he's done a phenomenal job at it. And we're about to announce another person who we're adding to the mine site team, who we're really happy to have attracted. And good people attract good people, and I think that that's part of what's really happened here, starting with Shane and those people at the Madson site. That marriage has really brought a lot of good people to West Red Lake. So that's what's making it possible for us to have confidence that we're going to be able to restart this mine successfully and soon.
Now, let's connect the dots and reveal how all these forces, gold's historic surge, silver's growing industrial demand, and macroeconomic backdrop, are converging to create what could be the most explosive silver rally in decades. Gold's record-breaking run isn't just a headline, it's a signal. Central banks are diversifying their reserves, ETFs are swinging from outflows to inflows, and geopolitical tensions are pushing investors towards safe haven assets. These forces have already sent gold prices soaring past $2,600 an ounce, with projections hinting at $3,000 or more. But here's the kicker. Silver, historically tied to gold's movements, often outpaces it in gains when the rally begins. The current gold-silver ratio, which signals silver's undervaluation, suggests a massive catch-up is inevitable. Then there's silver's dual identity. Unlike gold, silver plays a vital role in the industries shaping our future. Electric vehicles, solar energy, 5G networks, and medical technologies. The demand for these innovations isn't speculative, it's accelerating. As governments double down on renewable energy and green technologies, the industrial appetite for silver is expected to skyrocket. With supply constraints already evident in the silver mining sector, a demand-driven price spike becomes increasingly likely. West Red Lake Gold's Madson Mine serves as a microcosm of this story. The project highlights how efficient, well-planned mining operations can capitalize on high gold prices while setting the stage for a broader market impact. As gold-focused projects like Madson succeed, they draw investor interest into the sector, spilling over into silver equities and other precious metals. But here's the big picture. The world is entering an era of unprecedented monetary and geopolitical volatility. Rising inflation, a weakening U.S. dollar, and shifting global power dynamics are creating the perfect storm for precious metals. Silver, with its unique blend of affordability, industrial importance, and historical correlation to gold, stands ready to shine. So what's next? The alignment of these forces suggests silver could be on the verge of an explosive breakout. Investors who act now, whether by owning physical silver, investing in ETF, or exploring mining equities, could position themselves to benefit from a generational shift in the precious metals market. Don't wait until the headlines confirm what the dead already tells us. Silver's time is coming. Subscribe to stay ahead of the curve, and remember, this isn't financial advice, just a guide to help you navigate the opportunities in this extraordinary moment. Are you ready to seize it?